Hello and welcome back on The Pursuit of Wealth, everybody. It's Rod with Power Group. Today is Tuesday, August 17th. I hope everyone is doing well out there today. And in this video, we're going to be discussing Suncor Energy Inc., so ticker symbol SU on the NYSE, and all prices will be mentioned in US dollars. We're going to do some analysis on the stock and just going to recap a couple of other videos that I did with some warning signs as well. And a lot of people are asking, is now a good time to be buying Suncor? Are we expecting more downside? So I wanted to come on and do a quick video, but before we jump in, make sure to smash the like and subscribe to the channel. So you can see here, I did a video 1 month ago, two videos actually, one on July 7th and then one as early as June 21st. And I said, trouble ahead for Suncor Energy stock. SU signing, warning signs are flashing. So we were seeing those signs flashing back then. And then I said in another video on July 7th that we could be potentially seeing more downside, already down 10% after the double top at the 200 weekly moving average. So jumping over here to the SU. So again, this is what, if you check out that video, I drew out this warning and this text from that video. I said double top at the 200 weekly moving average right here at 25.69, then 25.73, and potential for a daily downtrend. You can see here when we came back down, we were in this pennant as well, and we formed a lower high into a lower low, bear break out of that pennant. And then we had that confirmed daily downtrend. And from there, it's just been all bears. We had a lower high and lower low, lower high and lower low, and another lower high and a lower low. So we're still in a daily downtrend. Bulls tried to attempt a daily trend change here with the low, high, higher low, and higher high, but they ended up failing. It was in an equilibrium type pattern, and they ended up getting another bear break into more downside. So still in a daily downtrend. But we are seeing a little bit of bullish divergence here in terms of the RSI here. You can see that the price is trending lower with lower highs and lower lows when we're seeing higher lows and higher highs here on the RSI. But we are piercing through that. But a nice lower wick here and strong close would potentially save that. But at this point, you could start to scale in, right? We got the bullish RSI divergence, but it can always go a lot lower than you think. So just zooming out here on the daily time frame, we do have support down here at 1640. That's the most nearby support, and a gap here as well at 1804. So you could look to play off $18 psychological. So if you're a bull and you're looking to enter, like I said, if you saved yourself, you would have saved yourself about 30% of downside there if you would have potentially, taken advantage of that call out from back in the end of June and July, and the beginning of July, when I said that we had that double top. You can see here at that weekly 200 moving average. We also had that double top on the daily time frame, and then we broke bearish out of that pattern into a confirmed daily downtrend. But we had a lot of indicators, right? On the macro perspective, we had the MACD, the stochastic, and the price crossing downwards through the 10-week moving average. So we had three major warning signs there. And you can see here on the weekly time frame, we also have the 50 weekly moving average at 1867. So again, we're right on that moving average. So you could look to play off of this support. So maybe you set your stop, maybe you enter with a stop below $18. You risk yourself, 67 cents or 50 cents, whatever it is. And then you look to potentially scale in. That's another way to do it as well. But you could potentially risk 50 cents to make upwards of $2, right? So those are good risk to rewards. So that would be one way to play it off $18 psychological. Maybe set your stop below that, allow a little bit of wiggle room, or you could start to scale in now and look to play off of that daily support at 1640. So that would be one way to play it as well. And just remember, it can always go a lot lower than you think. And then we also have the weekly VWAP here as well at 1889. So if we can close the week above that 50 weekly moving average at 1867, and then if we close over 1889, even better, because that means we would have saved the weekly VWAP. But if we close underneath 1889 here on the weekly candle, that's going to be concerning, as that will be the first time in many weeks and months that we've lost the weekly VWAP as support. And like I said, in terms of the 50 weekly moving average, if we can see a close over that 1867, that again will be a save in my opinion. And we do really have a lack of resistance here on the weekly, all the way up to about $25. So lots to risk to reward, in my opinion. We are seeing a bear cross of the 50 and the 100 moving average, not a death cross. Still a long ways to go before we would see a death cross. But if we do get a daily bounce underway here, I wouldn't be surprised if we very quickly shot up to around the $20 area. You can see here the 200-day moving average there at 1990. So if we do see a bounce, expect a bounce to about $20 psychological. Again, all prices are mentioned in US dollars. So we should have a decent bounce. We also have this resistance line here that we'll be looking for a close above. And we have the daily EMA 12, this yellow line, which has been rejecting the price quite convincingly for the last several months. And if we can close a daily candle above that EMA 12, that would be huge. Like I said, we're seeing a bit of bullish RSI divergence, but bulls need to break the high of the previous daily candle. We've been consolidating now for 4 days in a row. So if we can break the high of the previous daily candle, get the daily bounce underway, and then a close above EMA 12, that will be a huge momentum shift. So if you're a patient bull, maybe you're waiting for a daily trend change at this point. Maybe you're waiting for a daily close over EMA 12, like I said, which has been rejecting the price since we lost it there. So it's now over 2 months and counting. So if we were to close over that would be that EMA, that would be very notable. And on the weekly time frame, we did have that EMA 12 and 26 bear cross. So it looks like that has played through, but we'll see. It's a potential. It's a weekly bear flag that's confirming, and if we take the measured move from this bear flag, that would bring us down to about the $15 range, and we have support there at $16.40. So it's entirely possible that we're heading down to that $16 to $15 range. But $16.40, like I said, that's another way you could play it. You could look to scale in. So let's say you wanted to scale in 3 orders, you could purchase a little bit around these levels, and then closer to $18. And then start to scale in 3 orders, right? Maybe you scale in one now, one around 18, or maybe you wait until 18, another one around 17.50, and another one around 17, right? That'd be one way to play it. Or like I said, you could play off $18 psychological. In terms of the monthly time frame, we're just fine. So we knew, and that was another reason why in this, you might have wondered, well, how did I know? Well, we were due for monthly consolidation. It was $25 psychological. When we were as low as $9.61 in March of 2020. So $25 psychological is a nice round number. And we also, like I said, we also had the 200 weekly moving average there, and then the double top, which just ultimately sealed the deal and put the icing on the cake. And then when I saw this massive drop here, that was a big red flag for me that we double topped right there at that 25 nice round psychological resistance, which was also the 200 weekly moving average. And then I said, watch for a potential big bounce and then a lower low into a daily downtrend. And that's exactly what we got. So like I said, not that anyone has a crystal ball. It's just when things run for so long and we hadn't really had a monthly high or low, we pulled back here in the month of April, but we only lost the low of the previous month by about 35 cents. So really insignificant, and would not consider that monthly consolidation. But now you can see we're pulling back significantly after losing 23.22. I would have been out for sure. That was the signal that we were starting monthly consolidation. And even if you just entered from that signal, you would have saved yourself about $20% of downside. But we're just looking for a monthly higher low now compared to 1067. We are in a monthly uptrend here with a low, high, higher low, and higher high. So once we broke above 21.95, that confirmed the monthly uptrend. Now we're just scouting a monthly higher low compared to 1067. So it can absolutely go a lot lower than we think. So like I said, just keep in mind that we do have key support there at 1640. If you're looking to establish long-term positions, we're not weekly oversold yet. I could see this going a lot lower. And again, this week's going to be extremely important, right? If we can close this week above the 50 weekly moving average and the weekly VWAP, then that's going to be a huge save by the bulls. And then I could expect a bounce up to around the $20 to $22 area. So let me know in the comments below if you are looking to take a position in SU. But I'll be looking to scale in here myself. It's likely how I'm going to play this. What if the S&P 500 rolls over? Not set up well if the broader market sees a significant pullback and if fear spikes across the market. We haven't consolidated, so you can see here on SU, we started monthly consolidation. The S&P 500 hasn't consolidated on the monthly time frame in 11 months. It's going on nearly a year. So what happens if the S&P 500 sees monthly consolidation? This could easily pull back to the $15 or even the $10 area. Right? We have that monthly higher low, so maybe we get as low as $12 or $11. That's entirely possible if we see the S&P 500 start its consolidation. And I'll be looking to take a massive short position on the S&P 500 as soon as we lose the low of the previous monthly candle. So the level I'm watching is 421.97. So that's going to be key for me. So just keep in mind that if we do see monthly consolidation on SPY, how is that going to affect SU? So just be mentally prepared that we could see more downside. It can always go lower. And that's very evident what's happening right now in the MJ space, but we could even be heading to weekly oversold. We're only sitting at 39 on the RSI, so we could easily get down to, $15, $14 and hit weekly oversold. So I would potentially, just cautious. Again, this isn't financial advice. Do your own research. This is for entertainment purposes only. You have to hit their buy or sell button, but I'll be looking to take a position, but I'm going to be scaling in, likely put an order around the $18 and then mid 17s and then low 17s, and look to play off of that 1640 support. Like I said, we do have a lack of resistance really on the weekly for about 37 to 40% of upside. All right, going to end it there. Thanks again for joining us on the Pursuit of Wealth for a Suncor Energy update, and we'll see you on the next video.